Mark, thanks so much for joining us today. These questions come from readers of the Target Report. They're interested in just hearing more detail about some of the things that you've covered. It's been about a month now, about 6 weeks since the stock market declined and the shutdown, really this crisis became much more widespread. In the last Target Report, you made some predictions about deal activity. I mean, obviously we're still in the early days of all this, but is deal activity playing out in line with your thoughts that you shared about a month ago?
And we're seeing very few new deals being announced. Printing, packaging, and related graphic communications industries, the industries we serve. And I expect that May will be similarly quiet.
Okay.
Particularly what we're seeing is prospective sellers of healthy companies may very well feel as if they've missed the boat. The great 10-year economic expansion is over. I could recite many conversations over the past year or two that I've had with owners in their 60s, 70s, or even their 80s who will call up and say, Mark, do you think it's the right time for me to sell? And of course, I don't have a crystal ball, but I would say something along the lines of, the time to sell is when times are good. But a lot of those owners missed the boat in 2006, 2007, when the economy was roaring. They survived the Great Recession,
Yes.
and they're reaping the profits, the benefits of the return of health to our industry. That's especially true in the commercial printing industry, where printers struggled. Now they're making money again, or they were. One of the things I would say is a recession comes from a trigger event, and we had no idea what that trigger event would be. Now we know what it.
Yeah, for sure on that.
So now those owners that wanted to sell are faced with this, the new reality and the unanswered questions about how long is it going to take before the good times come back? And if they're in their 70s or 80s, can they wait another 7 or 10 years if we go through a long cycle like that? So I think it's going to take several months for those owners to reset their expectations and realize that the reality has changed.
Yeah, for sure. So how do you see the playing field between buyers and sellers really tilting or changing for the remainder of 2020?
Well, it's been fairly even for a couple of years. It hasn't been, in my opinion, either a buyer's or a seller's market. And I think that the prospective buyers of healthy companies that were paying good multiples, depending on what segment you're in, the definition of good changes. But I think they're going to sit on the sidelines for a while. Not only do they want to see how the market recovers for their own company, I believe buyers of healthy companies, they're expecting valuations to reset at a lower level and for it to be more of a buyer's market for a while. And until those expectations of the buyers and the sellers come back into line, I think we'll see less deal activity. The PPP loans, the payroll protection program loans that are flooding the market with cash, have also created a pause in the deal activity. If you think about the responsibility for managing this, the CFOs and the owners have been busy preparing applications. There was literally a week when that's what everybody was doing. The ones that have won the PPP lottery now have this boatload of cash, and they need to figure out, owners and CFOs, how to carefully and properly spend that money to maximize their forgiveness. And otherwise,
they have to pay it back.
So the rules are still being written and they're not totally clear. So there's a lot of attention being paid to that by CFOs and owners, as opposed to where's my next M&A deal, or do I dig into another deal? I know this is a long answer to your question, Rod, but there's also companies that were in financial distress before the COVID-19 crisis, particularly in the commercial printing, the undifferentiated commercial printer did not serve a particular market or have a unique offering, and publication printing, newspapers, magazine printing, have been struggling. The PPP funding is providing a temporary respite for those companies and it gives them a break from the urgency to do something.
Okay.
That will not last.
Yeah, right.
And frankly, it just puts off the day of reckoning.
Yes, indeed. Right.
I expect that somewhere around midsummer,
Mm-hmm.
my projection, we're going to see a flood of companies in these segments seeking to do a quick sale and tuck in their business to somebody else in order to stem the losses that not only do they have whatever their situation was before this,
Right.
but now they've got the change in the market.
What about printing labels? What about packaging? How do you see those segments going?
Well, really very different. I'm sure there are some troubled spots there, but we're also speaking with owners that are doing quite well.
Mm-hmm.
And if you think about companies that, and it really comes down to who their customers are. For example, if you're printing labels for Purell or some other sanitation product or related to testing, you're busy. You're printing 24/7.
Yeah.
And maybe you can't even keep up. On the other hand, if your customers are retail centric, you're probably at a dead standstill. Your display work, your advertising, maybe your direct mail has ceased, and that's that you're struggling. There may also be some longer term, what I might call systemic changes to the marketplace in packaging. And why do I say that?
Mm-hmm.
I think there are some industries that we've offshored the production that after these international supply chains basically fell apart,
Yes,
crisis or came under extreme stress, there may be new industrial policy that will require or incentivize the onshore production of certain products.
Amen.
And if that happens, then the packaging for those products will follow and probably come back to the U.S.
Right.
That's a longer term systemic change, but I suspect we will see some of that.
So what about wide format? What about the wide format segment?
Well, yeah, that's a great question, Rod. We've noted in the Target report several times over the last couple of years that that's a market that has enjoyed a long growth period, maturing. There's a lot of installed machinery now. The machinery has become less expensive, more sophisticated, faster. So margins are starting to compress. We've seen a couple bankruptcies and closures in that industry that we hadn't seen for a long time. And retail, retail's the driver of that market primarily.
Yes.
And we know what's going on there.
Right.
I'm not saying it's not going to come back, but I think it's going to change. And what we may be in for is the beginning of a consolidation phase in the wide format industry, similar to what happened in commercial printing 20, 25 years, that began 20, 25 years ago. And it's still continuing to this day.
Any thoughts on the banking industry's future with us? I mean, things were terrible for a long time, became much better. Where are we at and where are we headed?
Well, I think right now the banks are swamped with the PPP loan applications, the payroll protection program. I think that's what it's called. We have at least one client, the buyer of one of our clients actually, who applied for a loan to their favored long-term relationship lender, who frankly told this person they didn't have time to process their loan. They were too busy with PPP loans. That'll pass. The program will wind down.
Yep.
Banks will internalize the processing process.
They'll get faster.
But some of those loans will go into default and end up in the bank's workout departments. And if too many of them are in the printing industry, we may see printing, particularly commercial printing and publication printing, put back on the blacklist of lenders. We may not see just a biological pandemic in the printing industry. We may see a pandemic of failed printing companies coming out of this. However, the bottom line is right now, the PPP loans are extending life for some of these companies. So it's another reason why it's somewhat quiet right now.
Any comment on the bankruptcy filing of LSC Communications? You mentioned it in the last Target report that it was likely. Thoughts on that?
At GAA, Graphic Arts Advisors, our firm, we're mostly focused and serve customers with revenues in the $50 million and under range or thereabouts.
Yes.
So we'll leave the commentary on LSC communications to others. However, we do believe that there'll be a ripple effect from LSC communications bankruptcy. Suppliers, printers who subcontract from LSC,
Right.
If they're not paid the full amount of the receivables or they lose the work that they used to get from LSC,
Yes.
that's going to hurt them, and that'll ripple through the industry. And we'll see other plant closures and other bankruptcies and other non-bankruptcy wind downs that will affect the industry. So there will be a ripple effect from this. On the upside, there'll be smaller printers who print books and publications who will be seeing this as an opportunity. They'll see approaching LSC's customers that will probably experience disruption and dysfunction at LSC that's typical of large bankruptcy processes. So there's a plus and a minus to this for the industry overall.
What has been the impact of COVID-19 on our transaction activity at GAA?
Well, we've been very busy. We just closed a tuck-in transaction yesterday, April 27th, and that transaction is enabling an owner to gracefully exit from his ownership and retire. And at the same time, customers will be served, many will have a job going forward. Some of the equipment will be utilized. So that's a very positive transaction. And interesting enough, that engagement was in the works pre-COVID-19 virus, but we only were engaged on March 8th. So that was a pretty quick process to get engaged, find several buyers, get offers, and come to a closing. Even though it wasn't precipitated by the COVID-19 virus, the entire process occurred within the current crisis. So that was an interesting transaction to work on. However, we did have 3 transactions that were scheduled to close March 31st, 2 on March 31st, and 1 on April 15th. And all 3 of those have been put on hold. And one, which was very interesting for us, was we were working for a buyer to find a printing facility to operate in a totally different region of the US, strategically expanded our clients' services to their particular industry that they serve. And then we had 2 other engagements where we worked for the sellers who wanted to retire, and both of those we had LOIs, letters of intent, we were in final contract, and both of those have been put on pause for the time being, and we'll see if those come back as well when the market returns to normal.
Mark, thank you so much for taking the time today to share with us your insights. For those of you who don't read the Target Report, I really encourage you to subscribe. It's a terrific layout of what exactly is happening in the M&A portion of the printing field and beyond. Thank you so much for joining us today. Hope you'll join us for our next program as well.